Hello everyone. So I'm here to tell you the advantages and disadvantages of opting for new tax structure or old tax structure. The main purpose of bringing out this video before you is because we have been receiving many number of queries from the clients and from salaried people especially, asking us to advise them to whether opt for new taxation structure which was given by our Union Finance Minister Nirmala Sitaraman Ji in Budget 2020. First and the foremost thing, let me tell you, the new tax structure will be applicable only from financial year 2020-21. So this is where many employees were also questioning us through phone or through WhatsApp or through mail. Sir, please suggest us how to select or when to select a new tax structure, or should we remain back in the old taxation structure itself? So this video will help you to absolutely understand which tax structure would be beneficial for you as such. Because in the new tax structure, which was introduced by Nirmala Sitaraman Ji, there were many changes especially with regard to the tax rates. In case of tax rates, the various slabs have been further staggered. What I mean to say is, in the old tax structure, there were only 3 slab rate systems: 10%, 20%, and 30%. Whereas in the new, there are various slab rates: 5%, 10%, 15%, 20%, 25%, and 30%. So if you observe 6 slab rates, but in the old only 3: 5%, 20%, and 30%. So by staggering the slab rates, the Union Finance Minister had made a proposal to reduce the tax burden, especially on those who are salaried people. And these new tax structures is applicable only to an individual or a Hindu undivided family. So please focus that the new tax structure will not be applicable for firms and companies, because firms and companies are straight away taxable at a flat rate of 30%. Of course, in case of new companies and all, they are taxable now at the rate of 15%, provided they fulfill certain criteria. Anyhow, this video would definitely give you an idea, especially for individuals, because in a country like India, majority of the taxpayers are salaried people. So let us quickly see what are the pros and cons of old tax structure and new tax structure. So let me quickly share a screen with you, which will give you a comparison between old tax structure and new tax structure. And let me explain the differences so that every one of you watching this video can take a proper and a wise decision. Okay, let me quickly share the screen. As I was telling, this is the screen. Hope every one of you are able to view the screen. I have given you a comparison between old tax regime and the new tax regime. And in that comparison, I have given you, first of all, the pros and cons. Once we know the pros and cons, let us look into how different the new tax structure will be and what is the amount of tax which can be saved using the new tax structure. So let us first of all go to the pros and cons of both old as well as new tax structure. So first and the foremost thing, as I was telling, there were only three slab rates in the old tax structure, that is 5%, 20%, and 30%. And the highest tax rate, which is 30%, was applicable for an income above 10 lakhs. Whereas in the new tax structure, only an income above 15 lakhs will be taxed at the rate of 30%, which means yes, 10 to 15 lakhs will not be taxable at the rate of 30%. So let us quickly, as I was telling you, there are 6 slab rates now. First slab rate being the same between both old as well as new. So let us quickly see the first point of difference between old as well as new. So in the old one, if you observe, we have given you the tax at the rate of 30% for an income above rupees 10 lakhs. So the income above 10 lakhs will be liable for taxation at the rate of 30%. Whereas when it comes to the new tax regime, if you observe, only income at the rate of 15 lakhs will be taxable at the rate of 30%. That is why the first and the foremost pro for new tax is reduced amount of taxes, as well reduce tax compliance burden on the taxpayer. That is your first one. Then coming to the second one, very, very important. Many salaried employees, they claim two main allowances as an exemption. One is house rent allowance. Second, leave travel allowance. These are the two things mainly majority of the salaried employees claim it as an exemption. In the old tax structure, yes, they were allowed as an exemption. But when it comes to new tax structure, my dear, there is no exemption for house rent allowance, leave travel allowance, and special allowances which are covered under section 10 subsection 14 of the Income Tax Act, like conveyance allowance, daily allowance, helper allowance, uniform allowance, research allowance. Likewise, children education allowance. It is not tuition fees. Please observe. It is children education allowance. Yes, children hostel expenditure allowance. These were some allowances which were allowed in the old tax structure, but in the new one, no such exemption will be granted to the assessee. So please understand the second point. Then comes your third important point. Till last year, every one of you would have filed your income tax returns, and while calculating income from your salary, you would have definitely, or your employer would have definitely taken a standard deduction of 40,000 rupees or 50,000 rupees. Maybe for assessment year 2020-21, that is financial year 1920, your employer will definitely take a standard deduction of 50,000. But prior to that, that is assessment year 2019-20, your employer would have given you a standard deduction of 40,000. You can just take out your form 16s and see of last year. Last year means financial year 2018-19 I'm talking. Why? Because there was a change in the standard deduction. And you were eligible to claim the standard deduction in the old tax structure. Whereas when it comes to the new one, please be careful. No standard deduction is allowed, which means your salary as it is will be chargeable to tax. No standard deduction, no deduction for entertainment allowance, no deduction for professional tax. Yes, professional tax also you were claiming it as a deduction under section 16, subsection 3. 2,400 rupees maximum you were claiming as a deduction. But now they are not going to give you such amount of deduction. That is your third difference between old and the new one. So in the new, definitely it's a con. Then coming to the fourth, very, very important again for every salaried employee, because 90% of the salaried employees would have availed housing loan. Correct? Yes. So in this housing loan, what were you doing? You were claiming the interest on housing loan as a deduction. That means whatever interest is there, that was reduced from your salary, and the balance was chargeable to tax. So this was one tax saving idea which every salaried employee had, of course, which every chartered accountant or a cost accountant would have given as an advice to their clients. So you were happily claiming 2 lakhs as a deduction towards the interest on housing loan. But now in the new tax structure, such a deduction also is not available. You have to keep this point in mind. So if at all you are going to take a housing loan with an anticipation of claiming the deduction, please be careful that in new tax structure, you can't claim the deduction under section 24 towards the interest on housing loan. Hope you are clear with this point. Then coming to the fifth, another important point which every salaried employee will have. Not that other self-employed peoples will not have. It's not like that. The main focus is basically on salaried people. That is the reason I'm telling you. Of course, this point of difference is not available whether you are a salaried person or a self-employed. What is the difference? Deductions under section 80C to 80U, which were actually talking about LIC premium. Yes, many of us would have paid LICs and we would have claimed it as a deduction. We would have told to our employer, see, I have so much of LIC premium. Similarly, we would have given some donations. Many MNC employees give donations for, especially for saving the child's future, some poor child future. So you might have given, like NASCOM, you might have given a donation to NASCOM, who generally take care of the children and all, poor children, etc. So you would have claimed it as a deduction under section 80G as a donation. Yes. Similarly, you would have claimed 80GG rent paid. That is, those who did not claim HRA exemption. Every chartered accountant or a cost accountant, they were in fact taking this as a loophole for their clients, and they used to save the tax for their clients because the client did not honestly claim HRA. So let him claim deduction under section 80GG. This is what they were doing. Yes. Similarly, 80D, mediclaim insurance, health insurance. Many of us have nowadays, keeping in mind the environmental factors, everyone are scared about their life, about their health. So they would have taken definitely medical insurance premium, and you would have claimed it as a deduction under section 80D. But now in the new tax structure, you can't claim any of these as a deduction. Any of these you can't claim. That is why the new taxation structure has removed 70, around nearly 70 exemptions and deductions. So indirectly, the government wants to provide us with a simple tax structure. Instead of a complicated tax structure, they want to provide with a simple tax structure. That is why they removed all these exemptions, but they gave you a benefit in the form of tax rates. They have now staggered the rates into 6 categories, whereas earlier there was only 3. So it is just like a give and take policy. Yes. So next deduction, next the point of difference with regard to deduction itself, what I like to tell you is, so earlier, if at all you had to claim the deduction, what you have to do, you have to save the receipts. That is a proof of investment is what you had to maintain it as a documentary evidence. Then only your employer also would have given you or allowed you that amount as a deduction. But in the new, since there is no requirement, there is no possibility of claiming a deduction, there is no requirement to maintain all these documents as a proof. Why? Because you are not anyhow going to claim it as a deduction, no? So when you are not going to claim, you need not maintain anything. Because of which, one advantage in new tax structure, I tell you, now the investors, that is people like us, salaried employees, or any person who is looking for investment, he can do investment of his choice. Like when it comes to mutual funds, I tell you, if at all you want to claim deduction, you had to invest in a closed ended mutual funds wherein the amount was supposed to be locked in for a period of 3 years minimum, and it was withdrawable only after that time period. But now, since there is no deduction available under the new tax regime, if at all an investor wants to save his amount in some particular mutual fund, he can do it directly in the open-ended mutual fund, wherein he can withdraw that money at any point of time, which in turn leads to availability of liquidity. The liquidity source will be available with the taxpayer right now. Whereas in the old tax regime, since he was claiming deduction, he had to maintain various proofs. He had to make investments based on the directions issued by the Central Board of Direct Taxes, and hence he had no other choice of investment rather than to invest as per the directions. But now that flexibility is not, flexibility is there, and hence he can invest, and so that there will be no issue of liquidity crunch arising to the taxpayer. But in the old, yes, there was a liquidity crunch. That is what is the 7th and 8th point I have given you. You can just go through that. Proof of investment must be maintained, but here in new, no proofs required to be maintained. Then 8th one, it leads to liquidity as the money is locked for some amount of years or for some number of years. Whereas here, no liquidity crunch, as the money can be invested in the customized manner. Anywhere you can invest. Last one. This point is for those people who are having income from business. That is apart from salary. Yes, you might have some income from business also. Or if you only have income from business, then ensure that in the old tax structure, you were eligible to claim various amounts of deductions as an expenditure. But now, in the new tax regime, you will not be eligible to claim deduction under section 32, which talks about additional depreciation. Of course, it also talks about normal, but normal is allowed even in new tax structure, but additional depreciation is not allowed in the new tax regime. As well, no deduction is allowed under 33AB, 33ABA, 35, 35AD, 35CCC. Likewise, there are various other deductions which are not allowed. That is what is the 9th point talking about. I have also highlighted this point. You can please see. For business income assessee, no additional depreciation, no deduction under 32AD, 33AB, 33ABA, 35, 35AD, and 35CCC. Now, having said this, hope you are now clear about what are the differences and how to select between new and the old. But still, since you don't know exactly what will be the tax benefit, I am ready here to show you how it will be beneficial. But before that, I am mentioning a very, very important point. The point to be noted here is a person who does not have income from business. Yes, a person who does not have income from business, he always has an option to choose between old and new tax regime. Like for example, this year, if he is selected for old tax regime, next year he can go to new tax regime. Again, that next year he can come back to old tax structure. This flexibility is there for individuals and HUF who do not have business income. Whereas an individual or HUF who has a business income, if he selects himself to go for a new one, in the lifetime, he will get only one chance to come back to the old one. So the option of switching from new to old or old to new is available only once in a lifetime for an assessee who carries on business. But for assessee who does not have any business, he is always under a liberty to switch between new as well as the old tax structure. Now, in this point, many queries came to us asking us to tell, sir, should we opt for new or old? Because our employer is asking for a declaration proof. Because generally, every employer now for financial year 2020-21, yes, which has just recently started during our lockdown period, yes, financial year 2021, every employer has started asking investment declarations as well. They are also asking the employees to select whether they want to go for new tax structure or they want to remain in old tax structure. Here, many clients came to us, sir, what advice do you give? Should we go to old or should we go to new or should we remain back in old? For that, we always have been telling that it all depends on the amount of income what you have. Not that all the assessees can go for new, not that all the assessees should remain in old. It all depends on the income. But before, and I'll also show you how different it will be, and I'll also tell you which option is preferable by taking 2 or 3 examples, random examples we'll take, so that you will also understand whether to go for new or for old. Now, before this, with regard to TDS deduction, many employers are asking for this declaration. Again, a query has arisen here from our clients asking us, sir, now to my employer, I will declare that I am going for new. But at the end of the financial year, if I want to go for old again, can I go? See, here 2 aspects are there. One aspect is from TDS point of view. One aspect is from income tax return point of view. For this, the CBDT, Central Board of Direct Taxes, has given a clarification just 3 days back. The clarification given by CBDT is, if the employee has opted for new or old tax structure in the declaration given by him to his employer, and later on at the time of filing the income tax return, if he wants to change his opinion means, say in TDS form, the employee might have given new, but at the income tax, at the time of filing the income tax return, if he wants to switch back to old, can he do so? Answer is yes. This is the clarification which was given by the Central Board of Direct Taxes, which is the authority to control the collection and monitor the revenue of direct taxes in our country. So with this clarification, it is hereby clarified that you as an employee, you can please select either old or new and give that option to your employer at the time of filing the return. If the tax amount in, say for example, you opted for new, but at the time of filing the return, the tax as per old is less, we can select, and the TDS what was deducted by your employer will be automatically adjusted in the income tax return. So while filing the income tax return, if at all any TDS has been deducted more, that can be claimed back in the form of refund. If TDS was deducted less, the balance has to be paid. This is what is the income tax department, that is the CBDT, Central Board of Direct Taxes, has given a clarity in this issue. Now, having said this, I'll quickly take you through the example to show you how or which option will be beneficial, taking 2 or more circumstances into picture. So if you observe this, I have given a tax comparison between old and new tax structure. Now, first column is about old tax, second one is about new tax. Now, let us take one example. The income from salary of an employee. Income from salary of an employee is 7,50,000 per annum. Now that employee will be eligible if at all he is opting for, old, he will be eligible for a standard deduction of 50,000, which I have typed. Thereby his gross total income will become 7 lakhs. And assume he has a deduction under chapter 68, that is 80C. Yes, if he has a deduction of say 1,50,000 maximum amount, his total income will come to 5,50,000. In such case, please see the tax liability, the basic taxation between old and the new. Old will be 22,500, whereas new will be 37,500. You might ask, how come it is more? Yes, it is because in the old tax structure, you have 50,000 towards standard deduction, whereas in the new, you do not have that availability. That is why your income remains to be 7,50,000 here compared to the old of 7 lakhs. Whereas when it comes to taxation in the new, it is 0, whereas in the old, there is a deduction of 1,50,000. This is the reason why the income has changed from drastically, and because of that there is a difference in the tax liability. In this case of 7,50,000, and in this circumstance, if you go, it is always a benefit, tax benefit of 15,000 if you still remain back in old. And that is why tax regime to be opted, I have given you, it is old. This is when different situations arise. Now let us say our income from salary is 9,50,000. Okay, in the new also I am taking 9,50,000. Assume I do not have any deductions. I did not make any investments like LIC, mutual fund, nothing I have made the investment. So see what will happen here. See the difference. My total income is 9 lakhs in the old, whereas in the new, my total income is 9,50,000. Now see the taxation. See the tax difference in taxation. My new or my old tax structure, the tax liability is 92,500, whereas in the new, it is 67,500, which means there is a tax benefit. You can please observe the column here. Tax benefit in the new one is 25,000. So if an employee goes to the new tax structure, he will be eligible to save 25,000. That is why we have given a advice to opt for new one in this circumstance. Say for example, in the same circumstance, he has a deduction of, that is tax saving investments of 1,50,000. Yes, earlier I have shown you without the investment. Now I'm showing you with investment. Please see the difference. If he has a tax saving of 1,50,000, see what happens. His total income has reduced to 7,50,000 under the old, whereas in the new, it still remains to be 9,50,000. Then see the difference in taxation. In the old, it is 62,500, whereas in the new, it has now become 67,500, wherein there will be a tax benefit of 5,000 rupees. Hence, the option to be selected is new. So I think you have got an idea. So let us take for our employees who have salary exceeding 15 lakhs. Yes, so let us take quickly an example of 17 lakhs. He has a salary of, assume 17 lakhs, and assume he does not have any investment. This is without investment I'm showing you, but he can claim deduction. Yes, now please see, when there is no investment, his income is 16,50,000 in the old, but in the new it is 17 lakhs. But still, even though income in the old is less, but still please see the tax in the old, tax is 3,07,500, whereas in the new the tax is 2,47,500, which means there is a saving of 60,000 rupees to the employee if at all he goes for new. So that is why you have to opt for new. In case, the same case we will take, please see, same case, assume he has a deduction, that is he has made an investment of 1,50,000. Yes, I have taken a 1,50,000. Please see, in such case also, it is always advisable to go to new one. In such case, why? Because in new one, there is a tax saving of 15,000 rupees compared to the old one. That's why it is always beneficial to go to the new one only in this circumstance also. So this is the reason why I was telling you, To opt for new or opt for old, it all depends on the income. It all depends on the amount of investments you have already made. Like few people would have already made an investment in LIC, right? They might have been paying a premium of say 1 lakh or maybe 50,000, or and they might have housing loan principal repayment also. Yes, they might have some mutual funds also. Aggregate put together might come to 1 lakh 50, and this might be still continuing. For such kind of people, this calculation, that is this comparison, has to be done before they select for new or old tax structure. This is why, to give flexibility, the CBDT as well as the income tax department, they have given a clarification that even if at the time of providing for TDS declaration, if the employee opts for either old or new, he can still change his opinion at the time of filing the income tax return. This is what the clarification which has come out recently. And hope this example is easily understandable for every one of you. And in case you have any queries on this taxation, you can always feel free to get back to us. Okay, hope you are staying safe at home, and please protect yourself from the deadly coronavirus. Thank you, everyone.